Working down trader's not here, I'm afraid. He's busy putting out his fire on his Chinese portfolio.
The experts are telling me you're gonna get burnt. Be careful, the government will destroy you. My portfolio's in trouble. So how bad is it? I hold 3 Chinese stocks in my portfolio, and 2 out of the 3 are down. One of them, Tencent, is down the most. So what has happened? After an early year surge, the Chinese stock market has crashed over 30%. Set off by retaliation against Alibaba founder Jack Ma's comments last fall ahead of Ant Financial's IPO, Chinese regulators have embarked on a wide-ranging crackdown on Chinese tech companies with countermeasures ranging from anti-monopoly penalties to data privacy investigations to new rules regarding overseas listings. So is it time to sell out or take advantage of people's fear and be greedy? Okay, so let's have a look at the Shanghai Composite Index to see what's happening and see what evidence we can gain from there to see if you're holding Chinese stocks you're going to get burnt, or is there evidence of it's a great time to buy. So with this index, it's all the top companies within China. So you've got your Alibabas, your Tencents, your JD.coms, etc. And when we look at the chart, the high was back in 18th of February, where it reached an all-time high. The early start of the year was great, it really went up high. Then we had the government crackdown on, which was started by Alibaba, and the stocks of Chinese stocks plummeted with the fear of that the government were going to start cracking down on all the tech companies and stuff like that, which that has gone on. And then for a while it was in a sort of channel. It kept hitting the bottom of which was a support line down here for quite a while, and it kept hitting resistance, which was this pink line here, and it didn't break out of that until the 17th of May, where it broke through, sort of come back down and hit the line again. So the resistant line then became just a support line, and then it then went up for a bit, and it's come back down a few times. It's hit on the 17th of June, it's hit this line again, which is now turned into a resistance support line, and then we've been a sort of up and down, and it's hit this line several times, and recently it looks like possibly it could be heading back down to hit this support line again. What evidence can we gain from looking at some of the technical analysis from the charts of the Chinese market as a whole? Remember, this is the whole Chinese market, it's not just individual stocks, but we're just going to get a broad vision of what's going on roughly within the Chinese market. So there's evidence you could suggest that this support line is a strong support, and that it's going to bounce off the support line and go back up again. People are saying that the Chinese stocks are in a really bad way, and it should be fearful, you should sell them, etc. You're going to get burned. But it's already, the lowest it's been is back down here in March, and it's a lot higher than it was then, in general. So I think personally, I mean, when we look at the moving averages as well, it's found some recent support of the 100 moving average, which is the blue line, which is this one here. It's also bounced off that a few times, and in previous times gone by, it's also found a bit of support off this 100 moving average. So there are possibilities that there are good indications that this could be a support line, and the 100 moving average, is a good support level. So it could well be just bouncing off that and it's going to go up again. Obviously it could still come down to this line and it could break through, and if it breaks through the line, then we could be back down on another downward journey down again, It's a possibility. Nothing is 100%. But my personal opinion is that the Chinese government are getting their house in order. They are not pumping as much stimulus into their market as, for example, the US are. The US are just printing money for fun. The Chinese market have turned the taps off somewhat on their to get hold of inflation and to control it and to keep things tight. So I think they're being a lot more strict than say the US are, and they're cracking down on people as far as data and keeping people's data safe. I personally don't think it's a bad thing that they're cracking down hard on these companies. I can see in the long run this being a good thing, and I really do still believe that by the end of the year we shall see the Chinese stocks a lot higher than they are now. Possibly we could get to the all-time high. We shall see.
So when we look at some of the other factors to do with the Chinese market, we can look at fundamentals, we can look at the macro situation, we can look at the economic situation, stuff like that. And then when we look at the Chinese population as an example, I mean, the US population is roughly around 329 million people live in the US, where in China it's 1,398,000,000, which is like over 1 billion people more live in China than they do in the US, which is just mind-blowing, really. So you think of the potential users and customers of people that need services, need to buy things, etc. in China alone is just way, way above the US. So that has to be a factor, the amount of people in China. And then you look at the prediction of the growth of middle class people. Back in somewhere like 1995, the percentage of middle class people in China was less than 1%, which is that we're a very poor country. In 2020, the middle class has grown to 41%, and then in 2030, it's predicted to grow to 72%. So 72% of the Chinese population is going to be middle class. 72%, where people will have lots and lots of money to spend, and this is meant to be a country that's under a dictatorship, etc., and get told what they can and can't do. Yet it's a country that is very modern and very up on its technology and is one of the world's leaders, and the middle class has been growing fantastically in the last few years. So that's, I would say, pushing that as a good signing for the Chinese market, that the population is becoming more rich and looking after itself, and going to have a lot more money to spend, especially within the Chinese market. If we look at something like the macro situation, GDP growth for quarter one for the US was 6.3%. China's was 18.4% GDP growth for quarter one. So that's like over double, nearly treble the US's growth in quarter one. So that's a good sign that the GDP growth is doing fantastically well. Corporate earnings in the US, year-on-year corporate earnings was 49%, where in China it was 84%. So again, it points to that the market and the economy in China is doing really well. There's vast differences in the markets. The US, like I've said, has been pumping, and the Fed have been pumping the market full of stimulus, full of money, printing money, and that has led to inflation concerns, and with the inflation going up. The China's used a different approach to be quite strict and to pour cold water on their economy, and this is, I think, one of the reasons why the Chinese market has gone down, because they've been a lot more strict and they've not been putting much stimulus in, and if anything, they're trying to control inflation and the economy by pouring cold water onto it at the moment. So it's a massive difference. So I think that's why this US market is like going higher and higher and higher, and the Chinese market is going down because of the different approaches. I would say that if you look at the majority of stocks in the US, they are overvalued or reaching overvalued or at highs in value, where you could easily say the Chinese market, because everything that's going on, is down and undervalued possibly. Of course, investing in the Chinese market comes with risk. Most markets do come with risk. Obviously, the stakes in the Chinese market are a lot higher, and because you never really know what the Chinese government will do next, so sometimes they're hard to read. But there's no way they're going to, the companies, the big companies, the tech companies in China, are bring a lot of revenue to China, and there's no way they're going to go out and destroy these companies because they want them to be world leaders. They want that prestige as well. So they're not going to go out their way to hammer these companies. They have come down hard on these companies, as far as they don't want these companies being allowed to abuse people's data and look after it responsibly. They don't want them to monopolize the market and abuse that section. So a lot of the things they're doing, yes, they're being very strict, and maybe the way they go about it, and maybe some of the way the media portrays it is quite harsh. But and I think long term that these controls and these strict rules on these companies will be a good thing in the long term. And yeah, I can only see it as a positive.
When I'm investing, I'm looking to invest in really great companies that have fantastic growth and fantastic profits and keep growing and growing. If we look at one of the companies I'm already invested in, Alibaba, which is obviously one of the well-known Chinese companies. We just have a quick look at the chart. It's currently standing at about 211. Its high was around the 270 mark back in February, so it's come down an awful lot, and it's been on a downward trend for a while. But then we look at some of the financials, and this is what I generally like to look for. So with Alibaba, we look at total revenue. It has been consistently growing. Remember, these figures are in Chinese yen, but 250 billion, 376, 509, and now we're up to 717 billion is total revenue. So you can clearly see that the revenue has been going up and up and up, even through all that's happened over the last 12, 18 months. They're still got humongous profits. They're an absolute monster of a company. We look at net income. Again, a similar story. 64, 87, 149, 150. So again, net income is going in the right direction. So this is what we like to see. This is what I personally like to see. If you want to invest in great companies, is the total revenue going up and up every year, net income going up and up every year. It's all good. It's great to see. We look at the balance sheet. So when you look at a company, you actually look at the actual figures that present themselves, and you try and ignore some of the noise that's going on around the outside. Let's have a look at cash. It's gone from 199, 330, 321. So they've got a really healthy cash pile. Again, this is in billion, 321 billion Chinese yen of cash just sitting on the accounts. So they've got a humongous cash pile. Especially when you talk about the company have just been fined 2.8 billion in dollars. They've got enough cash in hand to pay for that. So yeah, of course it's a slight dent into their profits, but it's not going to make a massive difference to the company. What else we got? We look at also liabilities and the debts. Long-term debts, 119, 111, 120, 135 year to date. So it's gone up a bit, 135 billion. But when you think they've got over 300 billion, 321 billion in cash just sitting on their accounts, and they've got debt of 135 billion, they can pay that twice over if they wish to. So it's not an issue. So when you look at the financials, it's always good to see that the accounts are good and things are looking good. And Alibaba's does that. It's just a humongous company, and it's a cash machine basically. And you look at recommendations. This is on Yahoo Finance. In the month of July, 29 recommended it a buy, 18 recommended it a strong buy. We have the current is 211.50 with an average price target of 292, which would be above the previous high back in February. So that's great. To me, it all looks like Alibaba is way undervalued, and its long-term future is great. We can also look at another one I'm invested in, Tencent, which is the company that is probably the most down for me. I think it was 33% down. Again, the income statement of Tencent. Here we go. Tencent is a similar story, 237, 312, 377, 482. So again, growing revenue. Again, remember it's in Chinese yen, so 482 billion. So again, fantastic growing total revenue. Net income, 71, 78, 93, 159. Again, growing net income. Fantastic. Balance sheet. Cash pile 105, 97, 132 and 152 billion in cash sat on there in the company. 152 billion in Chinese yen. Look at long-term debt. Their debt is actually a bit higher now. I mean, at 111, it's gone up to 234 billion. So their debt on this one is more of a concern, possibly. But when they've got 227 in cash, 152 in cash sat there as well. They do have a bit more debt than Alibaba did, but it's not a major concern. Again, I think if we look at the chart, they've been undervalued for a while. So we're currently sat at 71, and it's been on a downward trend again since February's high, where it was 99, and it's down at 71. So JD.com next is another company that I'm invested in. If we look at the chart, we're down at 75, where its high in February was 106. So again, it's been on a downward trend because of all that's been happening in the market. If we look at the financials, the financials for JD.com, again, it's a similar story, growing total revenue 362 all the way up to 745, and then so far year to date it's 102 billion, and obviously Chinese yen. So that's a fantastic sign. So it's a massive tick there. And then you look at net income is 128, and now it's all the way up to 49 billion, 51 billion year to date, which is fantastic. So 2 big pluses there for that, for JD.com. And the balance sheet. Cash and cash equivalents growing from 25 billion all the way up now to 86 billion. So they've got great cash on hand in the company. We also like to look at long-term debt to see how much debt the company's carrying. At one point it was, that's the current debt, sorry, long-term debt. So it was 10.9, 9.8, 10, and now it's 12.5 billion. But when you think they've got so much cash or cash equivalents on hand of 86, that 12 billion is nothing, and they could pay that easily off with no problems at all. So their accounts and the figures and the financials are fantastic, and this is what we look for when we're looking into good companies, and we just ignore what's going on about it and look at what's actually happening.
Okay, so that's my defense of my Chinese stocks and my analysis of the Chinese market. I know we had a bit of fun at the start, but yes, my portfolio is down on certain stocks. But like I said, I still believe that the stocks I'm in are really great companies, and by the end of the year, this situation with the government will be resolved and it will start going up from here. That's just my belief. Like I say, it is a risky situation. I'm not saying it isn't, but I'm quite happy with the stocks I have, and I believe they're going to go up near the end of the year. So I'm quite happy with that. Okay, so thank you very much for watching. I hope you enjoyed this, and I'll see you soon.